Hey everyone. All right, so I got a really simple one for you today, one that I learned, and it is a absolutely, I think it's a phenomenal framework to be able to look at growth. Let me start off by saying, first and foremost, this statement: growth doesn't equal profit. Growth eats profit. Profit and growth have an inverse relationship. The more you want to grow, the faster you want to grow year over year, the more that it's going to put pressure on and likely pull down profitability. And so, simply put, the rule of 40 states that in a year, we want our year over year revenue growth percentage plus our profitability to be 40 or more. I'm going to say that again. We want our year over year revenue growth number plus our profitability number to be over 40. Okay. So what that's showing is, especially in a bootstrapped entrepreneurial environment, which pretty much all of us and as entrepreneurs are in this, if you're taking outside funding, that's certainly a different deal. All they care about is growth. All they care about is growth. And at some point, maybe I'll do the growth framework, talk about that. But specifically, when I'm talking about growth, I'm talking about revenue growth. Now, some of you may measure growth in other ways, but this is specifically how much did revenue, what's the percentage of growth revenue grew? Let's say at the time I'm recording this, it's April of 2024. Do you look back, how much did revenue grow in 2023 over 2022? Okay. Now we won't know 2024 numbers until we get to the end of 2024. So how much did it grow year over year? How much did 2022 grow over 2021? You can just do the math on that and get a percentage growth. I encourage you to do it. I encourage you to maybe stop this podcast and go do that immediately and just look, maybe go back to 2020. 2020 revenue was X, say it was 500,000. 2021 revenue, what was that? Let's say that was $550,000. Okay, so you can calculate the growth. Then what was 2022? Let's say it went from 550 to 750. And then the next year, what did it do in 2023? Say it went from 750 to a million. Now, I didn't do those numbers to then tell you what those percentage growth is, but you would know what the percentage growth is. Boom, boom, boom. Okay. And then look at what was my profitability numbers in each of those years. And so what you can look at is you can say, well, what was 2022 profit? What was 2023 profit? What was 2020? Well, of course, we don't have 2024 profit numbers yet. But so you add those numbers together. So if you looked at 2023, let's say that you grew 15%. Revenue grew 15% year over year. From 2022 to 2023, your revenue grew 15%. What was your profitability number? Let's say that it was 25%, let's say 25. Then you're at the rule of 40. That's fantastic. Okay. And where this helps is it's not just a backwards looking number, it can be a forward looking number. You can actually begin to set targets. You begin to set numbers here of what I want that to be. So if you say, man, I'm going to step on the gas pedal, I really want us to grow more than 15%. I really want us to see 25% growth year over year. Okay, cool. That sounds great. What is that likely going to put pressure on? It's likely going to put pressure on your profitability. So in my hypothetical example, say your year over year revenue growth was 15 and you want to push it to 25. Growth, remember, doesn't equal profit. It eats profit.
Are you an agency owner looking to grow your revenue, increase your bottom line, and better manage your taxes? Club Capital is here to help. Club Capital is the largest accounting and advisory firm for insurance agents in the country, providing monthly accounting, tax strategy, and CFO services. Way more than bookkeeping and your everyday run-of-the-mill tax prep, Club Capital is focused on providing financial and tax advisory services that help you plan and forecast your agency's performance. Their financial dashboards and agency forecasting tools help you better understand your agency's historical performance, create and measure future targets, and see how your agency compares to your peers around the country. Imagine what it would be like to understand the impact to your bottom line when deciding to hire a new employee, or forecast the impact rate changes or commission rates will have on your business. With over $200 million in tracked annual revenue and $140 million in tracked annual expenses, Club Capital has the data and the team to help you make better informed decisions for your agency. They will help you turn that back office stress into the backbone of your agency's success by giving you the tools to take your agency and your leadership to the next level. Visit club.capital today to book a solution overview with one of our business consultants. Club Capital, way more than a CPA firm. Ambition is the first step towards success. It's time to level up your agency. And Coach P Consulting will help you do just that by using the same strategies he used to sell over 700 life insurance policies in 2021 alone. Now, this is not your regular one and done type coaching. You'll get personalized coaching 2 days a week, every week of the month, and you'll get a live look behind the scenes of his team training and an office that's performing at the highest level. There's a reason Coach P Consulting is the fastest growing coaching company for insurance agency owners in the country. Coach P will train your team alongside his own and show you the exact steps they're taking to achieve Chairman Circle, exotic travel, and multi-line presence club, and be one of the few agents to be selected to have a third office. So whether your goal is to be at the top of your local market or amongst the best in the country, this training will give you the strategies and the tactics to get there. For just $250 a month, you'll get high-level coaching each week from someone who is already getting it done at that level, and his strategies work, and it's time to put them to work for you. Sign up at coachpconsulting.com.
So therefore, if it went from 15 to 25 and your profit goes down from 25 to 20, we still above 40. In fact, we're at 45. Okay. Profit went down a little bit, but we grew faster. All right. And so that could lead to more profitability down the road. And so there's always this inverse relationship that's happening between the two. And I would encourage you to do the math on that. And then you can start to use that as a way to think about it and a way to approach both growth and profitability. I've shared this with a number of people and they've loved that, not that blend. Of course, simple numbers to look at is 20% year-over-year growth plus 20% profit, you're at 40. And so when you're especially a bootstrapped entrepreneur, you're plowing back profit to be able to grow, we want to know, is that actually working? I know in my early years, I kept saying, I'm reinvesting. I'm going to call BS on myself there. No, I wasn't reinvesting. I wasn't profitable. I'm just calling myself on the carpet there. I can call it reinvesting all I want. There was no more money in there. There's no profit to be able to reinvest. I was lying to myself. There was no profit. There wasn't anything to reinvest. Distributions, I wasn't taking distributions. I was taking loans from myself to be able to basically look like I was reinvesting. That was BS. And so had I known this, I could have then began, but I say that if I'd known it then, I don't know if I would have, if I'd have realized even what I had, truthfully. So hopefully this framework of the Rule of 40, super simple calculation, you just got to go back and run some numbers and look at your profitability each one of those years, look at your year-over-year growth. Now, again, I want to dictate that some of you can look at growth different ways. At the end of the day, whether it's your sales numbers that you're making, selling widgets or whatever, at the end of the day, all of that still comes back down to one single thing. How did it impact revenue? Hope this helped. Till next episode, lead well.